Never a dull moment. We're back for another Friday financial wrap up with Mr. Michael Zuber. How are you, Michael?
I'm doing well, man. Yeah, I don't know. It's always fun doing what we do. I guess this is why I've done it for 30 years. Every day you think you know what's going on, and then smack, you run into a wall or you figure something out. It's a lot of fun, man. I really do love this. This is fun for me.
I do too, and thank God we have you. And I'm starting to actually understand what you've been talking about for the last 5 years. So thank you. Let's get into the show. So this is for Friday, October the 17th, 2025. The banking crisis 2.0. What is it? What the heck's going on?
Yeah, so I do think we have a brewing banking crisis. This feels very much like Silicon Valley Bank. I forget the other ones were called at the time, but they were in California, as I recall, and then there was one in New York for Bitcoin. But what have I been watching in banking? And I try to say this on the daily financial news because the financials always start the earnings season.
Yeah.
And, out the gate, we get the 6 or 7 big banks, JP Morgan, Goldman, Morgan, Wells Fargo, B of A, those Citigroup, right? Those guys. And, this environment is kind of set up for those guys to dominate and crush, and they are. But what we get kind of later in the week and into next week is the next tier, right? Community and regional banks.
Yeah.
And I have often felt that we were going to see, or I'll change it. I'll actually say, I have often felt we will see pain there. And, my hope was it was regional, right? If you're a community bank that's focused on Houston, right? I'm thinking you're going to have pain. If you're one that's focused, elsewhere, you might have pain. And for the longest time, we have seen regional banks and community banks kind of meander through, right? They didn't have any loan loss reserves really to speak of, nothing out of whack. They haven't increased their loan loss reserves. And what are those? Those are basically dollars that they put aside so that they can write off bad debt. And we're starting to see it. It's funny. Warren Buffett decades ago had a quote that Jamie Dimon stole or leveraged this week talking about cockroaches. And if you ever go into a house that's been heavily used and abused and you see one cockroach, with certainty there's hundreds or thousands elsewhere. It's just how it works.
Yep.
And, we're starting to see that, right? First, it started with auto parts first, and then auto parts at first, and then Tricolor. And now it's hit the banks, right? We've had Zion and Western Alliance highlight something between fraud and cheating. And dude, I think this is just the beginning. Now, will this lead to some banks being, kind of shotgun marriage like last time? Probably, right? We'll probably go in that direction. We aren't seeing anything that these banks can't handle yet. But again, you got to go back to that statement. If these two banks are talking about, I think one was talking about a $50 million hit, for example, you just know you have a strong suspicion there's more.
Yeah.
And it's like, where are these coming from? And lastly, I'll say here, you've heard me say this on the channel for a year, at least a year. There's real pain in the multifamily space, right? Syndicators did bad deals, right? I'm hearing that Houston, Texas is taking it on the chin right now with deals trading at 50% or less their last sale price. And what does that mean? That means if you had $100 million sale price, it's now selling at 50 or lower. What does that mean? Well, first off, that means the investors, all the equity is gone because that was probably 25%. But a 50% trading value means the bank also takes a 25, basis or 25% hit. So, and again, the last thing I'll say on this is okay. This is part of the process. What I hate is bailouts, and we'll get to that in a minute. But, I hate when we, kind of don't let bad behavior suffer losses, because that's how capitalism is supposed to work, right? You get out on the edge and you make bad deals and you do this and you do that, and for years you're called a king, and then cockroaches come and people realize that you're not as good as you think you are. So yeah, it's something to pay attention to. And again, we get regional and community bank earnings really the next couple of weeks. So buckle up.
Buckle up, buckle up. It's interesting that Graham Stephan, he reposted an interview from you, and it was a year ago.
Yeah.
And you were calling this and you were talking about this. And then, of course, things kind of leveled off, and then the focus shifted more to election and, all of the kind of tariffs has been the headlines. And this has been brewing in the background. Is that accurate, Michael?
Yeah, it absolutely was. I'm really glad that Graham reclipped that and put that out there, because it's fun to know that, the 30 years I've been doing this, I'm actually learned a couple of things. So it's fun to see. But yeah, I appreciated that from Graham.
Yeah, very good, folks. Maybe go check it out. It's something to look at later, maybe something over the weekend. Let's keep going. Let's talk about community banks. Just any other thoughts on what you see? The other bank that failed, I believe, was First Republic out of San Francisco. That was, I believe, acquired by Chase, JP Morgan Chase. So
correct.
Talk about anything else on community banks.
Well, I used that word bailout in my rant a few minutes ago because what you're seeing now is, frankly, inklings of a bailout. So what is happening right now, according to Bloomberg? This is according to Bloomberg, so it's not official, but their sources are pretty good. U.S. regulators will be lowering the bank or capital or banking reserve requirement to 8%, which will provide relief for community banks. This is just gaming the system. It's trying to take the pressure off community banks. It's trying to make their balance sheets look a little bit better. It's trying to help them do some more loans so they can maybe survive and get out of this. And this is what happens when, basically what I think this means is the U.S. regulators are looking at the chessboard, and my words, not theirs. They're seeing a lot of cockroaches. That's like this knee-jerk reaction, 24 hours after Zion and Western Alliance, dropped 10%. You have the U.S. regulators, kind of taking the pressure off the cooker.
Yeah.
That's, sometimes there's noise and sometimes there's signal. This feels like signal to me.
Yeah. And it's interesting because we did talk about this 6-8 weeks ago about Jamie Dimon during the summer. We actually did talk about this thing that was brewing. Jamie Dimon gave kind of like hints and clues about it. We'll come back to that. Let's talk about the government shutdown. What's your take? Where are we? What the heck's going to happen next?
One of my guests, who's a Wall Street veteran, Taylor, from Life Goal Investments, a great guy. I love having a Wall Street guy on the channel. He thinks that the Democrats are not interested in the shutdown stopping until Monday. Until as soon as Monday. Why? Because I guess there's this No Kings protest going on around the country this weekend, I guess, right on the 18th, so tomorrow. And, I guess they wanted to wait that long to do whatever they're going to do.
More virtue signaling.
I guess I'm going to stand, because in that conversation with him, we basically disagreed, which we actually do a lot, which is fun. He thinks this thing is over Monday, Tuesday, and I actually think this sets a record. I think this goes longer than 35 days. I think it feels to me that both sides are dug in on the key issue, right? Democrats want a bunch of money to do a bunch of things, and the Republicans have no interest in giving them a bunch of money to do a bunch of things. So I don't know how this doesn't go more than 35 days.
Okay. And the record's 35 days.
Correct.
And
in
we're
Trump's
at
first
like
term.
15?
We're at day 17. 17.
17.
Yeah, it started on the 1st of October, so 17th day.
There we go. Let's keep going. Let's talk about the Fed. A lot of pressure on the Fed, a lot of talk. What the heck's going on there? Are we going to see 25, 50? What do you see? How does this all play out between now and the end of the year?
Yeah, we've had a lot of Fed speeches the last 2 weeks. I think we must have had 30 or 35 of them if you add them all up together. And really what I think they're mainly telling you is, one thing is, I think you can definitely see more Fed presidents have moved to worried about the job market, right? If we had this conversation a month ago or 6 weeks ago, I would have said that the majority of Fed is worried about tariff inflation, right?
Okay.
That would have been the thing. At this point, you have plenty of Fed presidents that are concerned about tariffs, no question. But I think the employment market is become more urgent.
Okay.
I also believe they have to. They're seeking private data on what's going on, and that data doesn't look good. But in fairness, they don't really have a trend or history, right?
Okay.
So it's a hard job to do. I mean, we talk about the Fed all the time, like Monday morning quarterbacks, which is kind of disrespectful, but it is what it is.
Yeah.
I couldn't imagine doing that job with all the data, and now I got to do the job with half the data. That's tough. So, near as I can tell, the Fed is leaning towards they think a weaker job market, and near as I can tell, they're only going to do a quarter because they really can't do 50. In the absence of data, I don't think they can do 50 because that would be a knee-jerk reaction and one you may have to undo.
Okay.
So I think this kind of sets up. It kind of like makes a quarter the only option
Okay.
for 2 weeks from now.
Very interesting. So a quarter, not 50 basis points. And then where would that put us on the Fed fund rate?
375.
Okay. 375. So if we look at, I've been listening like everyone in the community. People talk about 2.5, 2.25 is like kind of a target, or at least for the current administration, for us to get to that level.
Mm-hmm.
Do you see that happening do you see that happening under Jerome Powell? Do we get to 2.5?
No, I don't think there's enough meetings because I think there's only 4. There might be 5 meetings left in Powell's career, including this one.
May, right? Is he?
Yeah, May. It's over in May.
Okay.
And I think there's 4, might be 5 meetings, including October. There's this thing called R star for a fancy language, sometimes just referred to as the neutral rate, which is an easy to understand concept, but an impossible number to calculate because nobody knows. Neutral rate is basically the Fed is not helping or hurting the economy. So today, it's actually interesting. Fed Moran, the newest member of the Fed, is out. He's actually out talking about the neutral rate is under 1. Under 1.
Under.
Right? I think under 1. Yeah, that's where he thinks it is.
Okay.
I would say that most Fed presidents, and this includes Waller and Bowman and Bullard. I think most of them think we're about a point to a point and a half off neutral. And again, everybody's guessing. Me, them, us, all of us. But it's somewhere between, in my opinion, I think Moran's way out over his skis. I think it's between 2 and 2.5.
Okay.
I think we get there next year, but I don't think we get there under Powell. I just don't think there's enough meetings. Yeah, I don't think there's enough meetings.
It's going to be just a slow move that way. And okay, that makes sense. Let's keep going. Let's talk about the job market. Obviously, that's a big influence on this whole big picture, jobs over inflation, potentially.
Yeah.
At least that's what we've talked about here. What do you see with the job market? How is this all playing out?
Well, again, I think, we're seeing the going, just leveraging the cockroaches analogy, we're starting to see more and more, layoffs. I think for the longest time, the Fed is, I think every Fed president has said this probably, this is a no hire and no fire environment. And I have often asked myself, okay, if that's true, which one of those breaks first? Because one of them is going to break eventually.
Right.
And, what we saw just over the last week, again, we're in earnings season. This is when the wave of layoff announcements will kind of come out. We're starting to see more, right? We're starting to see, Nestle, for example, right? Layoff, I think they said like 14% or something, 8%. It was a big number. Hewlett Packard Enterprise, big number, right? Couple of thousand folks. It feels to me, at least this week, that the fire, aka layoff talk, has started. and I've been waiting for it, right? One of these is going to break. And, obviously I was hopeful it would be the higher, but it doesn't feel like that's where we are. And if that builds momentum, that's when you start getting 50 basis point cuts.
Okay.
Yeah.
That's
when more
where,
headlines.
okay.
Yeah.
More,
exactly.
okay. All right. Well, we're obviously something you keep an eye on and something we talk about all the time. Let's talk about, so this is an interesting stat. 72% people are saying it's a bad time to buy a home. Unpack that. And what is your take? I know your take already, but
yeah, this pisses me
yeah.
off. This
Yeah.
really does, because this is just the media asking, and interpreting data wrong, poorly.
Yeah. Yeah.
Right? As somebody who's been in the game for 30 years, guys, this is the only buyer's market I've seen in 12 years.
Right.
This is not a bad time to buy. It's the best time to buy in the last 12 years, but only, bold, italics, underline, only if you're willing to do the work, right? Track days on market, write disrespectful offers, seek out the motivated sellers. And if you're willing to do that, this is an amazing time, right? I'm finding people in my community getting, 15, 20, 25, 30, and sometimes more percent off list price because they're doing what they're supposed to do. In my opinion, this is an amazing time to buy. I will agree if the media said 72% think it's a horrible time to sell, I would actually agree with that. You don't want to be a seller in a buyer's market. There's more inventory. There's less buyers. It's a horrible time to sell. I would hate to be a flipper in this environment.
Tough.
Right? You don't want to be somebody who has to exit in this market. You don't want to be a wholesaler in this market, right? Because you need somebody to buy. So again, it's a horrible time to sell. It's an amazing time to buy, comma, if you do the work. It just makes me mad. It pisses me off.
It's a biased question. It's the framework of the whole entire stat and question is it's totally biased. So again, great opportunity if you know what you're doing, if you're doing the work, if you're really in it to win it and doing the work, it's a great time. I want to talk about 2026, the mortgage market forecast.
Mm-hmm.
That's where we're going to go next. But before we do, a good friend of ours, Joe DeRaffaele, the great from Las Vegas, he texted me and said, hey, ask Michael about this. Talk about this on the show. He said the Fed Chair Powell, he admits that the Fed should have stopped buying mortgage-backed securities sooner and that we won't be doing that again. Unpack that.
Yeah.
What he's talking about, and then give us your take on it.
All right. Yeah. So first and foremost, I think that's the first time Powell ever admitted that they broke the housing market, because that's what essentially Powell just said.
Yep.
The Fed bought MBS. And if you don't know what MBS is, it's mortgage-backed securities. Mortgage-backed securities are nothing more than a collection of mortgages. And because they were an active, large, and dominating force in the MBS market, rates plummeted. This is how some of you have mortgages with a 1, with a 2, with a 3 handle on it. That's not normal. Right. The only reason we got there is that the Fed it had this appetite to buy mortgages, right? They were trying to keep the economy alive, and it worked. But, as we've seen, they kept rates too low for too long. And again, let's be clear. They didn't just buy purchase mortgages. They bought refi mortgages. And that's really where the housing market broke, is because we had this whole 18, 24, 28-month period where people were buying and refining at lifetime low interest rates. That's why the housing market is broken. That's why the move-up market is broken. That's why we've had, we will have record low transactions in 2025 because the Fed broke housing. So it's an acknowledgement that, quote unquote, they won't do that again. However, that's also a crap statement, right? The next crisis that comes by, they know that buying MBS works and they will absolutely do it again.
Right. 9/11, it happened during 2008 to 2009.
Actually, I don't really think they were buying. I think this MBS buying was the first time this cycle, but they know it works.
Okay.
Right. The Fed, and every crisis, like the .com, like 9/11, they try something, and if it works, they have another tool that they will do the next crisis.
Yeah.
So buying MBS is in the Fed's playbook. Oh, we need lower rates, buy MBS. And they'll do it again. Absolutely. The next time they need to stimulate the economy, they will do it again. It won't happen under Powell's watch. I think that's fair, right? Powell won't do it again. But I have there's not a fiber in my body that believes the Fed won't do that again if the economy falls off a cliff.
Right. Okay. So let's transition the 10-year note this week also, and then where we're at today, 10-year. How do you see it playing out going into the 2026 mortgage market forecast? How do you see this all playing out?
Yeah, so it's interesting. I've just pulled up the 10-year note on my phone. It's now over 4. It was under 4 yesterday and this morning. And I think so as far as the 10-year, I think we're going to be the general feather-like kind of fall is where we are, right? It just seems like the trend is your friend. Don't bet against it. I think that the 10-year is going lower. I think the 10-year, I don't know, where could it go? It could get to 3.5, kind of where we are. The mortgage spread or the delta between the 10 and 30 year has actually been widening the last couple of weeks because of, the kerfuffle going on in community banks and all of that. I think that reverses and continues on a long-term trend of coming in. The other thing that Jerome Powell said, interestingly enough, is they're basically going to stop shrinking their balance sheet. And what that means is they're going to stop letting MBS roll off. This is actually an important thing because according to PIMCO, that and it's not big. I mean, it's not big when you think in trillions. It's only about 18 billion a month, I guess. But what they're going to do instead of letting that roll over is they're just going to replace it with another 18 billion. So it's going to be net neutral to the market. But according to PIMCO, that simple, twist in behavior by the Fed could be responsible for 25 to 30 basis points lower. Because again, they're not going to come out and be, a huge buyer, but they'll buy, a little taste just to keep it even, just to keep it neutral. But according to PIMCO, right, the largest bond, house on the planet, they think that means mortgage rates go down 25 to 30 basis points. So, if you think about a 10-year note sometime in 26 at 3.5, you think of a mortgage spread that today I think is at 230 getting to 200, and you think about the Fed, going to a neutral stance. You got to assume that mortgages are, somewhere around 5.5 to 5.75 if all those things happen. I think by the summer that could be the answer. Yeah, I think. And the last thing I'll say about the mortgage market, because I have a lot of people, it's really interesting. For the last, I don't know, 6 months or so, real estate agents have been blowing me up. What's going on? But the last 5 days, I've had like a dozen mortgage brokers reach out to me, and I'm like, I think you're going to do, 10%, 15%, 20% more business next year, right? Because I think refis go up. I think purchases go up a little. But I think the mortgage business next year doesn't feel like a depression. I think the mortgage market's been in a depression for 3.5 years.
Yep.
And again, it's really funny, right? Because again, you think about doing 100 of something, and then it goes up 20%. So you do 120. But here's the deal: in the mortgage market, you're doing 100 today with 60% less people.
Right.
And then you go from 100 to 120, but you only have 40%. So it's going to be a buffet for folks in the mortgage market is my guess in 2026.
I completely agree. And transactions for realtors, for escrow officers, for title insurance people, all of it, I think transactions, we're definitely going to feel those rates coming in at 5.5, even sub 6, which
sub 6. We've learned that sub 6 is an important number. Yes.
And we've talked about it all year, and on this show about sub 6. So Barry Habib from Mortgage Backed Security from MBS Highway wasn't wrong. It's just the timing, right? Because he said we were going to be sub 6 this year.
Yeah, he's I think he's going to turn out to be just a whisper early.
Just a whisper early. Okay. I love it. Okay. So let's talk about, not in the show notes, let's talk about opportunities. What are you doing with school? Talk about the event in February.
Yeah.
What should people be focused on in terms of opportunity, and how should they plug in?
Yeah. So a couple of thoughts. First, opportunity. I want to remind folks, and I tell you this each and every year, I did about 60% of my deals between Halloween and New Year's Day. Guess what, folks? Halloween's here in a heartbeat. And again, back to an earlier stat, it's 72% of people think it's a bad time to buy is completely asinine and backwards. It's a horrible time to sell. So, Halloween to New Year's Day is our time to shine. It's our time to get aggressive. It's our time to get, ridiculous with our offers. Follow up. So again, the opportunity is right in front of us for a couple of months. So enjoy, have fun, get crazy with it. Next, school. We have a very special Sunday session on school. We're going to have Simon, the uneducated economist, coming on at 8:00 to talk to us. He's been putting out a lot of videos recently. I've taken some notes, so I got some great questions lined up for him. So I look forward. Shout out to Simon coming on. We're going to do more Sunday sessions. That's when I do my give back to the community at 8 a.m. over the next several months, because my travel schedule is finally calmed down. I had 6 weeks where I was seemingly out all the time, so I'm back home, which is good. And so join school. It's becoming obvious to me that one of the benefits, and this came to me from Bigger Pockets, was it's the place where we make new friends. And that's important for us as adults, because it's not as easy for us because we don't have all the opportunities. Lots of us want to get wealthy and get started, and we don't know. Like, you keep hearing me and Ty and Jason and all these people talk about, upgrade your network. It's like, okay, great, I get it, but how? Well, you got to join school, right?
Yeah.
Think about it being a club that costs you $20 to join. It's a gym. It's a gym for your mind, right? This gym membership's $20, 67 pennies a day. You get access to 500 people, doing the same thing, getting healthy. You have thousands of dollars in education. You have 8 or 9 accountability groups. You got a very active forum where you can ask questions. One of our friends has been in the community for years. She's not yet part of school, but she texted me. She asked me, hey, I'm stuck on 1 and I'm nervous to get to 2. And I'm like, you need to be in school. That's a question for school, because if you ask me, somebody who's, can't remember my second purchase. I remember the first one because you always remember the first, but I don't remember which one was second. I think I do, but I'm not positive. Right? You need to get around other people that are, on the journey and get their feedback. So again, you have questions about building wealth, money, real estate. Yes, I'm in there. Yes, other millionaires are in there, but you also got 500 amazing people giving you their thoughts, and they're probably a lot closer to you, right? If I'm on top of the mountain and you're down here, I'm not sure that my opinion matters, right? Maybe it does, because you just want to hear it. You want to, feel like you're loved by me, but maybe somebody that's halfway up the mountain wants to hear from it. So not enough of you have joined school, right? We have, 10,000 people that listen to this, show every day or more. And, more of you need to be in school. It's just that simple. Think of it as a club. It's $20 to be a part of the club and get there. And then finally, the event, man. The event's less than 4 months away.
Yeah.
And I'll admit, ticket sales are down in October. There's only been a handful, but some of you guys are sleeping, and you need to be there. We just had our hour conversation yesterday with our September purchasers. So, and I got to send out all these books. I got all these books on my desk.
Yep.
So let's do this. If you buy a ticket in October, I'll mail you an autographed book. So we'll do that in October. And so again, go get your tickets, get an autographed book as a thank you. And I hope to see you there.
Folks, buy your tickets for the February event. Michael, I'm going to twist your arm.
Yeah.
For people that buy in October, will you do a special Zoom for them?
I wasn't planning to, but because you just put me on the spot, I'll do another hour. Hour.
You know what though? Because the fact that people can just a little bit of time with you.
It was fun. You bring that up. It's a great point. I did it yesterday.
Just because you put me on the spot.
Yeah,
You can tell me
honest. I'm honest.
No,
Yeah,
you
I
were
did it
very honest.
yesterday for I think it was 8 people. I think we're on yesterday. I think it's a lot of fun. So yeah, I should do it again. Yeah, I'll do it. I'll do if you buy in October.
How about
We'll do a
this?
call in November.
How about the next 25 sales? We hit 25.
I'm not
25
going to
sales
track
for
that. I'll do it month by
too much
month. It's
tracking.
much easier.
Okay.
No, I'm
Okay.
lazy.
I'm
It's by
sorry.
month.
I'm sorry. You're like, dude, you're going to take over. You're going to
Yeah,
be
it's not.
in charge.
Yeah, you want to
Yeah.
track that? Go ahead.
Yeah, you're going to get me. I'm a volunteer for life. So here we go. Here we go. Okay.
No, we'll just
All
do it
right.
month by month.
Okay. Month by month. Okay, folks, buy your tickets. The event will sell out. It's a high quality event.
No selling.
No selling, not a pitch fest. You're going to get FaceTime with all the speakers. You get to meet everybody as well as all the community and get yourself involved in school. Michael, thank you for all that you do. Have a great weekend.
Appreciate you, buddy.
You're like, you do.